Ladies and gentlemen, thank you very much for joining me. Welcome to Pip Valley. I'm Roy Machingura, your host. There are a lot of things that have been happening around the world. In the US, there is commotion that's there. And also world over, there's also the pandemic. So I would like to extend my prayers to all those who have been affected by either of these events and to their families around. I'd like to extend my prayers to all those guys. Anyway, back to trading. Today we're going to be looking at the Euro USD as usual. And before we go into it, I'd like just to give a word of encouragement to all those who are in trading that remember that this is a gig that has maximum adversity. You're going to be exposed, we're going to lose, but we just have to lose well. We just have to learn to be good losers, to make sure that you protect your downside as much as you can, so that you can stay in the game. Because remember, as I said last week, it's all about staying in the game. It's all about learning through the pain, learning through the losses, and then in the end you will hit your home runs. I remember Babe Ruth. So Babe Ruth is one of the greatest baseball players ever, and he had so many more strikeouts, yet he also held the record for most home runs for a quite long period. So that's the same applies to us. We get hit a lot, but we should be able to survive. We should be able to make sure that we properly manage our money. We apply our money management skills so that we stay in the game longer, because the longer we stay, the more we adapt to situations, the more we trade long term and learn, and then get to experience more of those home runs I was talking about. So without wasting much of your time, let's get straight into our analysis. What we're expecting in this upcoming week as far as the Euro USD is that if you look closely, there is a formation of a triangle, right? So what we'll be expecting in the coming week is that since we have identified this triangle that's forming, it means that the price is consolidating. So it's consolidating in form of a triangle. So there are two scenarios whenever a triangle comes out. So it's either the price is going to break to the upside or break to the downside. So what we'll be expecting in the upcoming week is that if the price breaks to the downside, it will break out of the triangle and form a lower low, right? And then pull back, forms a lower high to retest maybe the edges of the triangle, and then move all the way down here to 1.1 to retest 1.18476 support zone, which was previously broken as a resistance zone. And then from here, if you recall last week, that's where we were saying that we'll be expecting bullish pressure to take place here, so that the price will be rejected and then move all the way up. But if it does not hold, if this zone does not hold as a support zone, the price is going to break the support zone and continue the downward spiral. Alternatively, what may happen is that this bearish tweezer that is inside the triangle may fail to provide a bearish trend, right, or a bearish pressure, to provide bearish pressure. So instead, when this fails, what will happen is that the price will break at the top of the triangle. So what's going to happen is that the price will break through this triangle and possibly come and break through also the 1.23526 zone, pulls back to retest it, and then move all the way up. So ladies and gentlemen, these are the two scenarios that we are expecting in the coming week. So now we move on to the daily chart. What we'll be expecting on the daily chart is, number one, I have two scenarios, right, that are showing consolidation. So the first one is the use of this channel that is formed, right? It's an ascending channel. So what we'll be expecting is that since the price is gone and broken this channel line, or the trend line, right, to break outside the channel, we expect that the price will maybe continue the downward trend and then pull back to retest this zone and then go all the way down to 1.18979. Alternatively, what can happen is that based on this channel, this might be a false breakout, and then the price will reverse and then come and break the upper part of the channel and also breaking the 1.23488 zone and then pull back to retest the 1.23488 zone as a support zone now before going all the way up. Apologies for my screen. Removing the channel, we can now look at it on a pure price action standpoint. The price is consolidating. How am I telling that it's consolidating? After forming a higher high here, the price went on to establish a lower low. So coming from a higher high to a lower low, usually it's a sign that the price will consolidate or is consolidating, right? So what I'll be expecting is that since it has formed a lower low here, I'm expecting the price to pull back and form a lower high so that it prepares to come and retest this 1.18979 as a support zone, because ever since it was broken here, it hasn't been retested as a support zone. So this is what I'll be expecting, right? And as far as the bullish is concerned, the price may just reverse from here, break this part, pull back and go all the way up to the next resistance level. So ladies and gentlemen, this is the analysis that I had for you for the Euro USD pair. So I'll be extremely cautious on this. Number one, I'll make sure that I'll be paying attention to the fact that this is a bullish trend, right? So I want to avoid trading against the trend. As I said before, I'm a long-term trend trader, so I don't want to trend against the main trend. So that's the first thing. Then the other thing that I want to make sure is that I observe the laws or the principle of higher highs and higher lows. So I don't want to buy in a higher high, I don't want to sell in a lower low. So those are the things. I'll be very careful in this pair. So ladies and gentlemen, I wish you all the best in your upcoming trading week, and I encourage you to continue being practicing your money management. This year I'm emphasizing more on money management so that we extend the time that we spend in the game. We don't want a case where I don't want a case amongst you or me where we're going to stop trading because we have run out of money on stuff. So let's stick to our money management. If you have allocated your money, your position sizing to be 1% of your total capital, 2% or 0.5% of your total capital, that will ensure you that you have more trades until you can blow out. So ladies and gentlemen, thank you very much for this day. Grind the markets with grit. Roy Machingura out.